Hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live session with you all again after a long while. I'm doing a live session, and I thought of just sharing my views on the current geopolitical situation and the current economic situation that is panning out globally, and what it probably entails for we investors here in India as to where the market might be headed. So uh, that's exactly what I'm going to discuss here. In the meanwhile, I would like to just say that whatever I discuss here is purely for educational purposes, and be it for any stock or any company that I talk about, you need to take your own call and discuss with your financial advisor, and then take a call on whether to go ahead and probably buy or sell that company. So this is purely for entertainment and educational purposes that we are discussing out here. So that's the disclaimer, a clear disclaimer on my behalf, that I'm not a member of the NSE or the BSE, and neither I'm authorized to give any portfolio advice, etc. So this is pure discussion on my knowledge and being in the market as a retail investor for the last 12 years or so, 11, 12 years I have been in this market, and what I feel about it, and where is the market headed, etc. We'll discuss about all the things in this live session, and plus I'll discuss about, you can say, I'll answer your queries as well towards the end of the session as well. So a 20-25 minute session that we are going to have here. I hope you all are doing well, and your investments are doing fine as well, because the markets have steadied themselves. The markets are doing reasonably okay. So it's not that the market is in a tailspin or anything of that sort. Things are much better than what it used to be, say, about a couple of weeks back when we went to 16,800. In some of the stocks, trending stocks, they are doing pretty well. Uh, we have, you can say, certain sectors that are performing exceedingly well over the last 3 4 months, and has been doing well even now in a down market. So we will discuss about that as to what needs to be done in here, what needs to be done in different sectors, and where are we headed, say 1 year down the line by March 23, what we need to do, and what is my tactic, and how am I doing in this kind of a business environment or a market environment, which is not hostile but extremely difficult to handle for we as, you can say, retail investors who invest into the market. For investors, it's extremely difficult. For even traders, intraday traders, things are not that great. So we'll discuss about that. Let more people join in. So before I start the discussion in earnest, let me just ask you that whether you're able to hear me and watch me properly. If you're able to do that, kindly do message me. So I'll wait for your messages also on the comment box, and let's see if you're able to hear me and watch me properly. In terms of sports, not a great day for India in the last two one-day internationals. Indian batting has, I would say, relatively failed, because they were in a decent position in the final one day. But Virat Kohli and KL Rahul, against the odds, or you can say against their natural way of playing or batting, threw away their wickets, and that probably started a collapse, which ended up making India lose by 21 runs. Now, although 21 runs might seem a lot, but at the moment, what it looks like, that if we would have carried on, and say players in the top order, especially KL Rahul and Virat Kohli and the likes, would have just carried on and stretched the match into the last 7 8 overs, we would have ended up winning the match. So yes, there was no due that was expected, and that played a part, because the Australian spinners did extremely well in the second, in the under lights in the second session. But still at what we were chasing at 270, and we were needing something like 120 of 22 overs or something like that. It was not difficult at all with 7 wickets in hand, 6, 7 wickets in hand. Uh, so India has to do a lot of introspection going into the World Cup. It's not going to be a cakewalk. It's not going to be like 2011. We had Dhoni, we had Yuvraj, we had Sehwag, Tendulkar at the top, and we had 7 batsmen. Don't forget that we had proper 7 batsmen in there, with a wicket keeper. That was a pure batsman in MS Dhoni. So we have to really think really hard and come up with the solutions to whatever has taken place, because in India, you should be dominating series even if it is against Australia or any other top-notch side. So now no one day international, and for me probably no Indian cricket for 2 months. I hardly follow IPL virtually. I don't watch it. Watched only one season in 2009, and that's just about it. India next plays in the West Indies in June. Before that, we have the World Test Championship final in England in June. So after that, we go to the West Indies and then to Sri Lanka and then for the Asia Cup. So these are the events before the World Cup. So looking forward to that. That's one part in football. We ended up beating Myanmar yesterday, and again a lackluster performance from the Indian football side, ranked 106th in the world. But we managed to beat them 1-0, although they are ranked at least 50 places below us. So that's something to talk about, that at least we won there. In field hockey, we are doing fine. So in Australia came to India and we beat them here, which was pretty good. One draw and one win. And Germany, we beat them in both the matches, and we did well. So now hockey probably takes off in the end of April. So that's about in a month's time when India tour Europe. So up till then, India is leading at the moment in the FIH Hockey Pro League Men, and the women's hockey side will play in the next year's Hockey Pro League, as I mentioned time and again, in the 23-24 season. So that is something to look forward to. So that's about the sports wrap. In terms of the Indian sports fraternity as to what is taking place. And now let's just come back to the market. So basically, what is happening is that the markets are digesting what has happened with what the Fed has announced. What I feel is that this is the best probably the Fed could have done. Going into this kind of, it was a very tricky situation, and eventually the Fed was able to probably mitigate any kind of fallout of the banks failing in the US, and we are in a situation where they could not have increased the rates by say 50 basis points or 75 basis points, or looking to just curtail inflation or get the inflation back to 3% and then to 2% eventually, because the inflation is at around 6%. That is not at all what the street would want. The street, in my opinion, would probably want a situation where the markets would want a situation where the Fed is able to control inflation and also control the kind of, you can say, slaughter in the banks that is taking place. So 25 basis points was pretty good, and that the Fed is going to increase 25 basis points again, probably in a couple of meetings time. That augurs fine for the markets, and that's why the markets are behaving the way they are. They have not done anything serious on the downside, and we opened gap down, but we have recovered from there. Dow Jones futures have recovered from there, so things are fine at the moment. Now, going forward, I believe that the Fed will move cautiously on this rate hike path. Uh, they might do one more by July, and that's what they have said, that one more hike is coming. So only one hike, I think, this year is possible for them to do. So we are headed towards a 5.25% on the interest rate in the US. And I have a feeling that things will get better in the second half, later in the second half. I will not be surprised if the Fed ends up reducing rates by November, December because of the inflationary pressure. Because I think 6% cannot be tolerated by the US economy for long, say for more than a year, year and a half. So once we get into November, December, we'll be down 6 months down the line of that. So probably one more year of, you can say, space would be left with the Fed. So I will be very surprised if the rate cut doesn't happen by December. So they have mentioned that there will be no rate cut for this year, but I think the stance could change by the end of the year, depending on the, of course, depending on the data. But uh, I think to curtail inflation is I think this is the biggest challenge at the moment. Yes, I understand banks are failing and there are many things that are taking place. But if the inflation goes out of hand, say 8%, 9%, etc., it's going to be extremely difficult to get that back to, say, even 5% from there. So at around 6% inflation at the moment, somehow the Fed needs to curtail it down, and the government needs to do its bit as well in order to curtail the inflation down to, say, even 4% would do for us. So probably next 6 months, and that is why I believe that the next 6 months could be extremely difficult for the markets. I have a feeling that we could be in a situation where we will be hard pressed to get to 18,200, 300, and I think we will not fall below 16,000. So a broad range for the market will be 16,100, 200 to 18,100, 200. 2000 point broad range for this financial year is what I feel is going to be the power for the course. And so any decline towards 16,500, 16,600 will be a very good buying opportunity. And any upside movement above 17,900, 800 will be a very good opportunity to probably sell. Probably if you are trading into the market, positionally trading into the market, you have built positions around 16,800 just recently, probably get out of those positions by 18,000, 17,900 or so, and then wait for massive declines in the market in your particular stocks. Just earmark those stocks, and when they decline 15, 20% from the top, get into them, and then again move with the cycle and make your money and then take the money off. So just taking that point forward, I believe that the market will be range bound, and it would be positional trading that could really make you money. Yes, I believe shorting will also make you money, but I'm not at all into shorting. Actually, I've never done that, and I would not recommend that, and I'm not going to do that. So I won't be able to discuss about that. Those people who are good at it, they do well. So good luck to them, because they will get a lot of opportunities once the market goes closer to 18,000. They can short stocks, they can short probably the index itself, because it is a clear indication that now for the next 9 months, at least 8 9 months, this market is not headed much higher, neither it is headed a lot lower from the current levels, but will be range bound. And that's why now stock picking has become extremely important. It's not a market of 2021 or 2020 or 2017 or 2014, that you pick up a sector, you pick up 8 10 stocks in that sector and you'll make money. It's not going to be that easy. You have to pick stocks meticulously. Even if you're trading, you have to pick stocks with their strength in mind. If you're investing, you have to pick stocks which has a lot of value, and you know that the next 2 3 quarters would be pretty good. Because now I'll come to the sectors, but because if you buy into companies just on value and the results are not extraordinary, they will get sold into. So coming to the sectors, that's why IT, although the stocks have fallen, the valuation becomes attractive. Not the whole of the IT space looks good even now. Not that you can buy just the IT stocks and over the next 9 months they are going to go up in the second half and all. Yes, particular stocks, they look good. Whatever stocks I talk here, I might be invested, I might not be invested into them. So kindly take that on note. But stocks like Newgen Software in the small cap domain, Tata Elxsi in the large cap domain, or larger mid cap domain, Coforge on more declines probably, TCS at these levels and on dips. They do look good from the IT space. Say Cyient is also looking good, and so Sonata Software, and there are companies that are looking good, but not all of them at these levels. So Sonata, for example, has gone up so much over the last 3 4 months. It's better to wait it out for them to consolidate and buy. So all in all, in a nutshell, say IT for me as a sector is an avoid, but particular stocks you can probably look at. Uh, Again, pharma has done nothing, and pharma is looking extremely weak and sell off. So contrarian buying could be there in some of the stocks. FMCG is trying to come up, but I think inflation is going to be a big factor here in India as well. So FMCG does well when the markets are not doing well, and that is exactly what is happening, including Titan. So we are looking at the moment on the sectors that have been doing well for the last 3 4 months. You look at public sector enterprises, not PSU banks, but PSU enterprises, say Mahanagar Gas, etc., or some other companies in that space. But you have to be wary of this OFS thing, that if the government does any stake sale, we have had that shock with IRCTC, and we have had that shock again with HAL. So that's a real caveat when you're getting into PSEs. Then another sector that had been doing well recently, and so is oil and gas, or all the oil space. That is also doing well. Infrastructure is doing well. There are companies in the infra space that are performing. You have to look at it. Say L&T, you have ABB, you have Bosch. So the power space is doing well. Auto ancillary is another space to look at, autos and auto ancillary. But again, pockets in this space. So auto ancillary is a huge gamut of stocks that we are talking about. You have to pick and choose in them, and then pick your stocks. If you are looking for 1.5 years, 1 to 1.5 years time frame. If you are looking beyond that, this is the best time to invest. If you're looking 3 to 5 year time frame, pick up the best in FMCG, the best in class consumer companies like Asian Paints, Pidilite, HUL, etc. Pick out the best in class IT companies, say a TCS, Infosys, and say a Tata Elxsi. If you really want to get into mid cap, pick out the best in class companies in pharma, Sun Pharma and Divi's, Dr. Reddy's. I mean, next 4 5 years they will come back with a vengeance. I think it's a matter of 18 months or so of this pain that could continue. So 18 months is gone. Another year to 18 months is left, because this is not going to end very quickly for the market. Let me know in the comment box what you feel, but I think it's going to be a range bound scenario between 18,100 to 17,100, and that's where you need to pick and choose your stocks. If you are a 5 year investor, you can really get into those sectors which are down and out and people do not want to touch, which are export oriented sectors. If you are a 2 year investor or less than that, or a trader, or a positional trader, you need to get into sectors which are doing well at the moment and are not falling a lot. I mean, they are going to continue to do well, in my opinion, for the next year. All right, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow a channel. That will help you also ask me questions and eke out answers in greater detail. Yes, Ravi, I think this is the best time to invest into the market. In fact, if you have SIP going on to stocks, going into stocks, if you have SIPs going into mutual funds, this is the time to really top it up big time, because 16,000 of today, if 16,000 gets hit, say in the next 2 weeks, would be equivalent to say less than 15,200 of February 22 when the Ukraine crisis happened. So it would be something like 14,500, 16,000 of today if that happens, because earnings have grown for major part of the companies here in India. So that is why at this point of time there is extreme pessimism in the market. People are talking of 12,000, 13,000. I don't think that will happen, but the stocks will go down so much that will feel like 12,000, 13,000. So 3+ years, yes, get into export oriented companies, top notch companies which have done extremely well and just are not performing because of the factors that are happening in Europe and US. So that's the point. All right. So Vinod, KSB Pumps is a decent company, but I would refrain from buying into agri companies. Now, this is another thing I have talked about, that over the last 4 or 5 years, monsoon has been pretty good, and it has been a given that the monsoon is good and agricultural economy or agri economy or rural economy will do well. But this time around, things are different. We are seeing rains in end of March across North India, and it's cold here in North India in end of March, which, and I'm talking of cold, not just saying that okay it's not hot and all. It's like here in the place I live in, it's around 8 degrees or 10 degrees in night, which is unseen for late March. So things are not good on the agri space. So probably get into autos, urban auto companies, or you can say auto companies that have really not done well for the last 4 5 years, and are set and are coming up with very good you can say results, or into industrials, into capital goods, into power companies. They will do well into infrastructure company, or you can buy into summer stocks. I mean, even now I feel that a Blue Star, a Varun Beverages, a Voltas, these companies, even a Symphony, it has run up. If you can buy at lower levels, from a shorter term point of view, these companies could end up making you money for the next 6 months rather than getting into any company whatsoever. So check three man, pharma and IT should revive after say 4 5 months. So in the next 4 5 months, you could see another 10 15% downside. That is the problem. So it's not that that we don't know about these companies and probably they'll not recover and all that. They will recover, and probably they'll recover in 2024. But how far can they go down? That is the query, and that's where I am skeptical of buying into pharma and IT even now, depending on what you're buying. So, a DV's Dr. Reddy's at this point of time is an avoid. I would rather wait for them to go up 20 25% and then buy when I'm sure of their results and what they are about to achieve in next few quarters, rather than buy now and sit it out for 6 8 9 months. That's my point. Similarly, in IT, I've just mentioned, you can reverse the tape and listen to that. Okay. Pharma consumption themes for next 3 years, best opportunity for investors. I think it is, but I don't think next 3 years. I do not know the time frame. That is the point. Now you get into any company in the pharma space and it doesn't do well for 1 year. Next year the pharma index does well and that company has a US FDA issue and all that. That is my problem. So I am now at this point of time going with the prices. I am now going with what is the current situation in a particular company and then getting into it, rather than probably you can say forecasting as to what the sector or the company would do and whether when should it recover and all not. For example, I just give you an example. This is purely an example, not a recommendation at all. Mastech, for instance, at around 1650 looks extremely attractive, 1600, 1650 and all that. It has made a low around 1400, 1450. It has come up from there. Everything looks good on the charts. Looks good relatively, that it's not making lows and all in this kind of a market. But if I get into Mastech at this point of time, I know for the fact that the next quarter might not be that great, then the stock may fall and then recover again, and then the next even quarter after that might not be that great because of the condition in US, and then things will pick up. So 6 months of mine will go away uh, just to buy at the right price, or thinking that I should buy at the lows. So do not go by that fallacy. Probably wait it out, let the results become better. And I would rather buy at 1900 rather than buy at 1650 and sit it out for 6, 8, 9 months. Uh, So Shriram V-Guard, interesting company, very decent company, top management, but the stock doesn't do that well. So I won't say that it's a top-notch company in this kind of a space. Look at other companies also; they are good. If you are invested, hold on to the stock because it doesn't go down that a lot. So if you are having the stock, then you can hold, but do not buy a fresh. So that's the call. Okay. So Ismo, very interesting company, very interesting stock that you're talking about. Again, companies like Ismo or Naukri for that matter, or Zomato, etc., they'll all do well when Nasdaq do well. Nasdaq will do well when the US economy does well. US economy will do well only when the rates come down. Now, that is the kind of a circle of, you can say, difficulty that we have got into. So I would avoid anything related to Nasdaq, anything related to US economy or Europe economy at the moment, even if it performs well, because if it performs well, it will be an outlier, but I won't like to get into it. So Bhupender, Ease My Trip is a decent company. In fact, for the next 3 months, it does look good at current levels, but keep your strict stop losses and only then buy into it. Uh, or probably if you want to invest, then it's not quite the top-notch company to invest into. Vinod, I would like to make a video on specialty chemicals, but okay, I'll tell you one thing. In specialty chemicals, there are very few companies that could stand the test of time, and we have seen that happen. So one is SRF. I think SRF is going to do well over the next 8, 10 years, but very difficult to say if other companies would pitch in, because there are many other conglomerate companies that have gone into chemicals and are putting up, you can say, capacities which are quite significant compared to, say, smaller companies. So an Asian Paints is getting into it, a Pidilite has got into it big time, Grasim has got into it big time. So it's not a space now to look at. It was the space to look at in 2015-16. It has been 7 years of bull run in this space. So that's why I'm not making a video on specialty chemicals, because there could be a situation where these companies might end up doing well, but the stocks may not do well. So that's the call. Okay. Okay, I don't know about this small company, so I won't be able to comment on it. Ravi? Jai Krishnan, just read the news as to why it is down, and probably you would refrain from getting into Hindustan Aeronautics. The OFS price is around 2450, if I'm not wrong. So one until the OFS is done, we are not sure whether the stock will move up a lot. So I would say it's an avoid at the moment, even now with the fall. So that's the call. So basically, what I feel is that get into India-centric businesses. That's what I meant by saying into, you can say, construction and capital goods, etc., power and all. India-centric companies in which and or sectors where the government is spending a lot, because the next 1 year I think government is going to spend a lot and put in money into these sectors, and these sectors have been under pressure for 14, 15 years. I'm not talking 2, 3 years, but 14, 15 years. Some of the companies are making new highs. So these are the companies probably to probably get into. So thanks a lot. Please like and subscribe my channel and hit the bell icon so you get my videos straight away when I post it. Kindly support me on Patreon. The link will be in the description. Thank you.